All right, good afternoon, everybody, and welcome to the Bookmap Academy meeting. This is a time where we go through your content, open the mics for you, listen to your trade decisions and your trade markups from the journaling that you've done, and then we give you feedback. If you're interested in this program, then you can sign up for free. You just go to bookmap.com. On a minute to bookmap.com, and it's taking a while here. Minute. All right, well, anyway, I'll show you later. For some reason it's not loading. Oh, there we go. Okay. And then go under the more button under community, Bookmap Academy right here, and you can read about the process. You can get Bookmap for free. You can get data for free. You can get add-ons for free by participating in this program. You'll have to prove your way as you go through the process with a quantitative and qualitative threshold to meet. Just one piece of content per day that you mark up and journalize, but it has to be quality. So if you can make that, then you can get Bookmap for free in the Bookmap Academy in step 2 over here. So you can go through the steps here and understand the whole process, how it works. All right, so let's jump in here and go through the disclosures and a few things, a few notes, and then we'll jump into the mentoring here. A general disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the process we go through. I show this during the All Markets webinar on Monday, Tuesdays, and Fridays. The same process I go through, and journaling to build out your playbook here. Impetus: what's moving the market? Your key levels on your higher time frame. Your scenarios and strategies. You're going to put these 1 and 2 together, and then you're going to start to outline, well, when price comes up to a certain level, what are you anticipating? If you're bullish and the data coming out from what's moving the markets is bullish, and you're at a key level and you see an order flow setup and scenario that matches your scenario of a breakout, then you are interested in a breakout strategy. You choose that in number 4 here, and you grade it with your checklist, and you determine the sizing, the risk that you want to take. And based on the order flow, you execute and manage your trade. So that's the process for the Bookmap Academy. There is a subset of that called the Bruce's Pilot Program. That is a special program within the Bookmap Academy, and it focuses on building a trading edge, because this is the biggest gap that I've seen between most traders. We're all told that we need to have a trading edge, a defined edge, and a process to build that edge. And few of us, or what I've come across, have that edge, and we don't know how to define it. We don't have a process. This program is designed to change that with a structured process. So if you're interested in this, you can also sign up from that on bookmap.com. And then the more button here, and then Bruce's Pilot Programs just right below the Bookmap Academy right here. And you can go and you can sign up here. Okay, it's all included with your Bookmap subscription, right? So for Global or Global Plus, you will need to have that. So it's necessary. So those that have it, then you can participate in it. No extra cost. All right, we're also having our Blue Jacket competition. It's back. You can win not only this the coveted Bookmap Blue Jacket hoodie, but you can also win Bookmap for 3 months with data, and it's about the trade control panel and challenge here. So show us your best trade, basically, and then you just take a screenshot, mark up your chart, put it on social media, X, LinkedIn, or Instagram, and then just put in hashtag free blue jacket, and you'll automatically enter into it. All right, so those are the news updates. Let's jump in here and take a look at some content. All right, so let's see, coaches, who do we have in here today? We got Trading is Life. Come on up to the stage. We've got oh, what happened to Shark? I saw him in here earlier. Okay, got Robert, and that's it for now. We'll see when the other guys come in. Oh, he had an appointment. Okay, I see. Okay, Shark was not be able to attend. Oh well, that's too bad. There's something I wanted to go over with Shark, precisely with him. He had a great trade that I wanted to cover. Anyway, all right, let's take a look here and see who we've got in the room, and then we can start to go over some of their content so we can invite them up to the stage here. Okay, a lot of new guys in here, so welcome. Yeah, I don't see too many. That's fine. It would just be better to turn on the mic for them. Why don't we start with Moby's here, Coach Moby, and we'll go over Shark's content here. Okay, so or I'm sorry, TD's. TD is a new guy in here, so I don't see him here in the Academy room as well. So anyway, we'll jump in. We'll bring up his screenshot here and start to go through it. All right. Let's see. So I didn't read what Moby had written here. We'll just we'll take a look at his chart and we'll go through it, and then get a discussion going here with the coaches. All right. So he's got his checklist. He's in the pilot program here. The trendline break accumulation. Here is his setup checklist right here. Okay, looking for just these 4 elements and grading them, and looking for the these elements and marking them up on the chart. As simple as that. Here he's got passive accumulation on 2 levels, and then he kind of says it's kind of light on the 3rd one down here. Okay, we also see this is the 9:30 cash open. He's got his trend line. Now the trend line, I need to kind of cover what exactly we mean by a trend line. It is market structure. We're looking for a break of that structure. Okay, this is in a trending environment, right? It's a downtrend. We're looking for a reversal. So it's a break in structure is really the element to cover here. So sometimes they kind of turn into a horizontal structure like this does as well, right here. Okay, and it broke out from there too. It broke out here though. Okay, and looks like he is entering here, and then rides it up here. So let's see. No aggressive accumulation, no book ride, no volume. Okay. Not sure about the setting here. And he's trading stocks. This is great to see. Because we don't have a whole lot of stock traders. It's mostly futures. Anyway, yeah, I mean he's got his 4 elements on here, and he notes that there's not a whole lot of aggressive accumulation, and you know, that's what we're seeing. I mean the passive accumulation looks pretty good on a couple levels. I would say this isn't really the best setup, and even the fact that, you know, you can see here that he graded his trade 6.75, and we're looking for an 8 or better, basically, on this setup here, and that doesn't really meet the criteria for a high probability trade. Nonetheless, looks like you know, he took it, and I don't know where he exited, but since he's on Fidelity, Anyway, that's my feedback on it. Like, so it's pretty light on a few of these things in here, and I'm just not seeing it. But you can see he's looking at CVD in here. We recommend, or we say actually no indicators. But in this case, it's kind of interesting to see that the stock, the accumulation on the aggressive side, it really bumps up right in here, and you can see the divergence in here. Right, it's pretty clear, and that is aggressive accumulation. Okay, so the aggressive accumulation is kind of starting off early, which is a good thing, actually. I really like that, because when you get aggressive accumulation after some of that, it usually works pretty well. All right, so anyway, let's see. John, nice to see you. And DNT, let's bring you up to the stage. And welcome back, John. You've been away for a bit. Happy New Year. Okay, so trading is life. I'll pass it over to you and your expertise on the trendline break accumulation.
Yeah, thank you. Hey, John, welcome back. Happy New Year. Basically, I have the same response as you do. The only thing I'm not seeing, where is his exit? Where did he place his stop loss, and where did he exit the trade? As far as the entry, I think he entered the trade beautifully. He waited to after the he waited to after the accumulation, after the trend line break, after the pullback. Then he entered right at the pivot where it pulled back before. So that was like a perfect entry. I don't see where he had his stop loss. That's the only thing. And I don't see, like you said, where he entered the trade. But he was the passive accumulation was there. I don't think that was a key level where it started revert back up because he didn't mark it.
Yeah, just said. Well, he said pre-market lows. So I mean that you can't see it on here because it's over here someplace.
Okay, so that is a key level.
It's a key level.
Okay.
Yeah.
Okay, so that is a key level. Yeah, so that's all I have to say because I wanted to know where he placed this stop because the only issue I see here is the stop. Um, and that's it. I think the entry was beautiful. He waited to after the pullback. He waited to after the pivot to enter the trade. He had his aggressive accumulation after the trend line broke.
Hmm.
So I think he played this beautifully.
Okay. All right. Let's see. Robert, haven't heard from you. Welcome back as well. Any comments you have?
Hello, Bruce. Yes, I'm happy that I'm back with you, with all of you guys. Comments. For me, I often like to criticize a little bit, so maybe I cannot see very good the volume at the bottom. It's very flat in this markup. So. Well, as everybody knows, I put attention to the delta volume, and I can see that it's a little bit higher, but it's not very clear. The guy also said that there was no aggressive accumulation in the moment of entry. No, the aggression was not very big, so it's not very strong. What can I say? As we had some passive, we had the trend line. It's okay for me because it's the beginning of the I don't know how to say. And for me, the best thing is that he understands the setup. He understands that he has to find four points of the setup, and he tried to do this. So generally, I think that he understands, and in the next example or in the next trade, he will be better and better. What can I ask only to look for the clear setups, because no, not everyone is very good to show something like that.
Yeah. Understood.
It's okay, but it's not strong, I would say, like this. And even he marked is as 27, so it was not strong. And maybe also we are prepared to S&P, and this is not S&P, so maybe the behavior of this market is a little bit different.
Yeah, that's true too. D&T, any comments? D&T, you're on mute. All right, maybe he's away. John, welcome back.
Oh, thank you. Can you hear me okay?
Kind of. Kind of faint.
A
little bit better.
How about better now? Better now?
Yeah, I think that'll work.
Let's see. Okay. Well, a couple of things. I do echo the volume or the bars on the bottom, that setting. You can anchor the value on the left-hand side of the chart, and you can stretch that up. And it's not going to interfere with the chart because the volume delta bars are transparent. So you might consider raising that up so you can see when volume comes in. And you can see by the volume dots, there was some volume that came into the market, some buy volume came into the market at his pre-market low. So I can understand why he would want to look to getting long. It's just that liquidity is still pending below at 270.
Yeah.
And on this type of trade, I'd like to see that liquidity get all cleared out. And that was still in there. And then right at the entry, they added liquidity at 270. And that would have been a problem for me. That would have nipped it for me. But it looks like, he was getting long with the pre-market low, with the volume coming into the market at 73. And then probably his, or at least my target would have been up there at 84 with that liquidity showing. But I can understand why he was looking at this, just not the best setup for those reasons. Volume is working in his direction by way of the CVD, which was started by that volume at the pre-market low. But again, with that lingering liquidity below, I would have a little hesitation with that. There are better setups when all of that liquidity is taken out on the accumulation end.
Yeah. No, good stuff, John.
Sorry about that, John.
D&T.
Oh, sorry about that. I don't know if you heard that. I made a loud noise just now. I didn't mean to interrupt you.
No, I think John's finished. If you want to give your comments.
No, I didn't have much to say. I was saying I was on mute on accident, but the same thing that Robert pretty much said. I mean, bring the volume bars up a bit so we can see little. You would be able to see as well the aggressors a little bit more, but and then ticker itself, I don't really know. Maybe, and Robert already said it. I don't really know. Maybe they act a little bit differently than what I'm used to as well, like on the NQ and the S&P. So maybe they act a little bit differently, but that's all I was really going to say. So same thing, pretty much.
Yeah. Okay. I mean, I think we all are kind of in agreement here. Like, it's pretty. I mean, it worked out, but there's a lot of weakness here on multiple and like Robert gave a really nice kind of some nice comments. I think that and that it's weak, but like he knows the setup. He's identified the things. I think just risk wise though, wait for a better setup. I think you'll just have better luck. The volume for sure. I mean, one thing with stocks is this always happens is that at the cash open, there's just massive volume. and it really kind of makes everything else in here like a lot smaller. But agreed, like you can just hover over this number over here and then left click hold and drag it up, and then you'll see a lot more, and that'd be really helpful, I think, because it's hard to make a decision based off of this in here, I think. And then also, yeah, boy, if it hit down into this liquidity in here and then rejected, I think you really got something a lot better. Especially if you see a lot more, aggressive accumulation start to come in, like over here. This is kind of what you're looking for, something like that, or something like this here. But like you want to see it up here. That's when it's telling you it's ready to go. And then yeah, I think targeting some of these areas up in here are pretty good. And yeah, I'm just echoing all your guys' comments, but the setup is here. And I think what I just want to just take one step back and just say, like, we focus so much on these 4 elements in here, and it was Nadia, well, it was Laura really that brought my attention to it, of like, don't worry too much about, understand the context of these elements altogether. This isn't so linear, like 1, 2, 3, 4. I know we've got it numbered and everything, but you have to understand the context of these elements altogether. That's what gives it kind of the magic. And like if there was light, maybe it was light on the passive accumulation here, then you want to see really aggressive accumulation though, moving that market. And that is a context to understand. Or maybe it's just massive accumulation down into and maybe even through a key level, and then the break of structure and maybe kind of light on the or lighter on the aggressive accumulation. It doesn't matter. The buyers are in, the bottom set, no one else is selling, and that's when you can look for this to move. So it's this context that I think will really help. It helps me a lot to put that into context, so that now I'm starting to understand and kind of get a feel for the market, no matter what the instrument is. But that's another good comment. This is a stock. How does it trade? How does it behave? It's going to be a little different for compared to, like, some of the futures products that a lot of us trade. So all right, I don't know, any other comments, guys?
Oh, just he asked about the volume is different in Bookmap versus other platforms. Did you talk about that a little bit?
Yeah,
This is number 4.
I have no, yeah, I have no idea, like, why it didn't match or whatever. I mean, he might be,
They're all different.
they're
Yeah.
all a little, it's not as centralized as like the futures products from the CME or CME group. I mean, that's a very, very centralized order book. Whereas, you have ECNs, you have, I don't know what, we know DXFeed, depending on, we don't even know what kind of subscription he has here. If he's looking at the bundle, if he's looking at NASDAQ or EDGX, etc. So
Yeah,
it's hard
anything.
to be objective about that.
Yeah, exactly.
All
I
right.
usually, even in Bookmap, you can just change a setting or change a couple settings, and it changes everything of the way you look at it. So you really have to kind of tweak it, and then kind of get used to what you're looking at or what you're asking for or asking from it.
Yeah. Well, let's move on to the next one. It's too bad he's not in here, because he's been pretty active over in the pilot program. So here's another one, right? And he's looking at MSTZ and news, Bitcoin under pressure. Okay, so we see the move down. We see this again, real big divergence down here, but that's not a part of the setup. And then I like this. He's got his structure. He's looking at the horizontal. He's looking for the break, pullback on that entry there, and then grabs it to the upside. So pretty nice. Hard to see the passive accumulation in here, but the way that this trades, it looks like a lot of algorithmic activity over in these areas in here. So when you see it really spotty like this, that's pretty typical. But yeah, it looks pretty good. Higher time frame level from back on January 12th at $16, and it comes down to just about that. So let's this time let's throw it over to John. Any comments on this? John, I think you're muted. Okay, I guess we lost John there. So let's jump over to. Well, let's start again. Oh, there he is. Hey, John. I don't know if you saw this one, or if you want to maybe go a little bit later. Comments? Yeah, we can't hear you.
How about now? Can you hear me now?
Yeah, now we can. Yeah.
Okay.
Much better.
Oh, better. Okay,
Yeah.
thanks. So yeah, all I was going to say is, yeah, it breaks the structure there. And again, his volume setting is real low, so you can't see it, but you can see the volume buyers as he has circled there. So it looks like when he breaks the horizontal structure, he's going to join in with those buyers at 1670. So I think that was pretty good. I don't know what his target was. I do see some liquidity up above it at 1730. But you see like that where he has it circled over there to the left where you are, Bruce. You have one, and then you have another circle right in there. You see the volumes. He's joining that once it breaks the structure to the upside, and I think that would carry him forward. And I think that's what the CVD is telling him. You know, you have progressive buying in there. Yeah, there you go.
Yeah. Nice detail, John. And there's some structure here too, as well. Below that swing there.
Yeah. So on balance, really, before this structure is taken out, you just look at this and you're inclined to think that they're accumulating here on the way down, and they want to get long.
Yeah, exactly.
That's my read.
Yeah, nice one. Yeah, and I'm really curious to see how far this thing went. Because it looks pretty ready to slingshot here.
And this one can go. Yes.
Yeah.
That's too bad. Yeah.
So anyway, beautiful entry on the pullback. And you got a lot of support there too on that pullback. A good one. Sometimes I don't like that. I wait for a kind of I might have even gotten in on something like this because this is pretty powerful, and if it comes up and it breaks it, I would look at this as the pullback, and that this is the carry through to the upside, and it didn't, and then finally it did. But like anyway, this one looks real safe to me. Because there's just I don't see a lot of selling, and buyers are firmly in control here above the structure.
Yep.
So guys, I think you know what, I'm going to let you guys take the I'll just say, well, we've got another trader, and then I'll let you guys go first, because I think I cover all these points, and then you're going to say, yeah, and don't really have anything to add. So anyway, let's turn it over to Robert.
Okay, so first of all, as you also, I cannot see passive accumulation. It's difficult to see, but we can see the structure that he drew, trend line, and we've got some down move. It's surprisingly, we can see a lot of green bubbles, so we can see that there is aggression from buyers. The aggression is coming. We can see the horizontal structure the quite big one with the pivot on the left side on the beginning of the picture. So the structure horizontally, we can say that it's quite big. Unfortunately, I cannot see the bigger picture. I don't know the behavior of this market, because sometimes when I feel that there is a real stop of going the price in the down direction, I sometimes would suggest to try to do some aggressive entry, because as a matter of fact this entry is very high, and I'm not sure how, looking at the session volume profile and everything, I'm not sure there is a lot of space above. No, this entry was not very late. It was quite good after pullback, so it's okay. But when the price broke the structure, horizontal structure, we had a bigger volume delta, and in the moment of entry after the pullback was not so strong. So it's secure, it's okay, but not so safe, as a matter of fact. So anyway, for me it's much better setup than the previous one.
Yeah.
And generally it's okay. A big understanding of the setup, as you said. Also, the understanding not to not to learn by heart 1, 2, 3, 4 and all of the elements, but understanding what's going on in the market. So I feel that this person feels what he is looking for, and he is able to find it. So
Yeah.
quite nice.
Yeah. Let's see. Trading is life.
Yeah. You said everything, Bruce. I'm just joking. I think he really nails down the concept of his entry. Like, I really wish next time he start putting his stops, because I want to know how he managed the trade. But I think he entered the trade beautifully after the pull up. Then you see the pull back with the exhaustion. It didn't even come all the way down to where the structure is, and then it started going back up. I mean, he was not even in drawdown at all.
Yeah.
The trade just started working out in his favor all the way up. I wish I could see how far it went up,
Yeah.
but I think he entered the trade beautifully based on reading the chart. And like John said, look at the spike in the CVD to match, saying that the buyers are stepping in with and they're in control. And if you look at the volume, you don't see no red volume at all. It's nothing but buyers stepping in. So he had all of that on his side.
Yep.
And I think it was just a beautiful entry. I just would like to see where he put his stop loss.
Yeah. Well, where would you put yours? Trading is life.
Based on where I would have entered, where he entered, my stop loss would have been right under the structure, right where you have your yellow line is.
Right here. So
Right under.
you'd put it down here, something like this.
A little bit further, right under, because as soon as it breaks that structure, meaning I'm wrong. So it would have been a little bit more up.
So it would have been
Right where,
you'd put it here at
right
16.
where right there, yes.
Yeah.
Correct.
Okay. Right. So yeah, pretty aggressive. Yeah, I mean it's really telling you something though with this.
Right. You see where the yellow the green bubble, right where it broke the structure. So that's where my yeah, right there. That's where my stop loss would have been, because that's where the sellers are.
Got you. Okay.
The
All
red
right.
one, right at the next one, the one after it.
So this one.
That one.
Yeah.
Yes,
Yeah.
that one.
So you'd put it right below that.
Yeah, right
Okay.
there.
So like right there. Okay.
Yeah, exactly.
Yeah.
Right there, exactly.
Okay. All right. And let's see. DNT.
I just was curious. Who is this? I didn't really catch
TD
who's these were.
is the guy's name.
Is it DT?
No, TD.
TD, huh? Oh,
Yeah.
we should have pinged him, huh?
Yeah.
He's in the pilot program?
Yeah.
Okay. And these are live trades?
Yeah. It does look like they are live. But no, he's in sim down here, but it's live market. Yeah.
Okay. I was just curious. Pretty interesting trades, pretty good trades. I mean, he seems like he got the structure down. He's observing the horizontal structures, which is nice. You know, the move down had all that CVD, but you know, the thing with CVD is you have a the reason why we don't use the CVD in there is because it's kind of complex. It could be complex to read, right? So a good
Totally.
example is today where the CVD was going up all day. It's like increasing all day, but the market's kind of like moving down. And yeah, it made for a pretty good bounce, but when you're trying to interpret it on multiple like a day in and another day and another day, it's like you kind of have to keep observing it. But there's a lot to read with the CVD. It's part of the reason why I think that we don't really try to include it in the pilot program. It could be helpful, but usually if the market's going down and it's going into passive bids, like this one was going down, but it's going down like on buying, right? Which is like kind of awkward behavior. You would anticipate the market to be going down on selling, and you'd see selling when it's transacting into those passive um, bids. So
Yeah.
this is a little bit different on this one, and so it's hard to really tell like what they're trying to do here when it's going down on buying,
Well,
and so waiting for the break. Uh-huh.
this is an inverse fund. I'm looking up the stock. I've never heard of it. It's an inverse fund of MSTR. So
Oh,
anyway, like yeah, it's kind of complex, and so I don't really understand what this. I mean, yeah, it's possible, of course, for a stock to go down on more buy volume, but like
oh yeah,
it's a little more complex, and we do see that kind of behavior more in stocks than we do futures. We'll see it in the futures every now and then, but like it's just yeah, more pervasive in stocks.
very very cool. I mean, waiting for it to like break out, and then observing that horizontal structure there afterwards was pretty. I don't know, smart. Pretty good. I do agree with what Robert said too, though. It is a kind of late entry, but it's is almost like a low volume pullback where. But
Yeah,
and Bruce was saying you would have entered earlier, and I probably would have entered earlier as well, looking for that move out, like you had already mentioned. So
yeah,
like this entry where it kind of like is almost failing back down is a bit dangerous. The earlier entry, which you mentioned, I probably would have took that earlier entry where it breaks out, then it gets a low volume pullback and then moves out. Trying to
yeah.
get it again a second time is it's usually best the first time, right?
Yeah,
This
that's what I find.
hmm.
Uh,
So
um,
that's
yeah, and about CVD and why we don't look at it is like we all we have to do is focus on these four elements here. That's it. And understand the context between them. That's it. This is, I think, a distraction. So that's why we don't look at it. If you guys want to, we have always said, like from the very beginning of the pilot program, if you want to bring that in, you can do so, like in your studies, etc. But like, just start with these things because it's really, really, really important to understand, especially this one up here. This is why we started with this setup because it's kind of a difficult setup. But understanding passive accumulation, is really critical, and a lot of people don't have access to that, and they've never seen that. So if you can start to understand that, then these other elements we're kind of more familiar with: key level, break of structure, and aggressive accumulation and volume. But the first one, passive accumulation, we're not so accustomed to. So that's why we put it first, and it will really help you understand that, and especially the context of all four together.
Yep.
So anyway, let's see. I think that's it for TD. And then he's got Shark down here. And boy, I almost want to hold off on Shark. Let's see if there's anything, because it would love to have him up and chatting about it. Nice one. Sees the whole. He's really getting it down. Understanding this context really well. Let's see. Let's see who else is in here, and let me see what I've got here. So hold on a minute.
It's a shame that he's not in here. That would have been a good one to discuss.
Yeah. He's got another one that I really want to go through. And it was something like this. Like, I think he bought one of these on the way up. So it was beautiful. It was like, God damn, Shark, way to go. Like, really putting the pieces together. And just mastering like these four elements all together and understanding their context. Yeah, good stuff. All right, well, maybe we can come back to that, and let's see here. I'm going to jump over to, let's see. Okay, is Daniel in here? Daniel Rui? I don't think so.
No.
But we've got his, and let's see who else we have. And Wintim, and he's not in here either. We went over him last week. And guys, if you're wondering why we're not covering you, is because we look at your spreadsheets from the Academy. If you fill them out, and all you have to do to fill them out is very simply, like here, let me just show you Sharks here. All you have to do is, like, he does a lot more. He's putting in a description here. Here's the sample. All we're looking for, and you don't have to put these in if you don't want to, the platform and the topic. Just put in the date and the link. That's it. So all you have to do is, like, as you can see here, like from Twitter or from Discord or whatever. So mark up your charts. You guys are doing it anyway in the Academy, so you might as well get credit for it. And then put it into your, just go to your over to your Academy here, Bookmap Academy, and then, like here, for example, Daniel Rui. All you have to do is just click on the three dots over here, and then this copy here, copy message link. That's it, right? Paste it in here, and that's it. Just one per day. Anyway, if you do that, we will invite you up to the stage. Okay. So let's see here. Let's take a look and see what he's got cooking here. Okay, so just looks like I don't know if he's got liquidity down here or not, or doesn't really look like it. Retest a volume event and target previous day high here. And that's it. Boy, look at all the market pulse widgets he's got up here. He's got a lot of lines down here as well. ATR, CVD, a few other things in here. A lot of some of the market pulse lines in here as well. I don't know. I'm just going to turn it over to you guys, actually, and let you guys bring up the subjects here. Let's see. Let's jump over to. We'll start with you, John.
Yeah, that really is a distraction. I don't know what that line represents. The blue line, the Cian line. Yeah.
Yeah.
I don't think it's
Is that Scott's? Is that Scott's lines? Maybe one of them. Or no?
I don't know.
Not doesn't look like it, huh?
I don't know. I don't know. I don't know what it is.
Well, I see volume coming into the market after he actually got in with that. Yeah, exactly. And I see liquidity above that could represent a target. So there are buyers coming into the market there for sure. I wish I knew. I wish that line wasn't in there so I can see if there was any liquidity down there. But it looks like on balance, the liquidity is more above where he was getting in. So that's a plus. And that's exactly, yes. So I can see his interest for wanting to get long in here. Not a fan of all the widgets. I think that could be a distraction. Yeah, I'm not familiar with what's going on in the subcharts. I really can't see it. But I see two things. The balance of liquidity is above, and buyers are entering in the market, and he's riding with that volume, that buy volume. That's what I see.
Yeah. Yeah. I got a good comment on that, but I'm going to turn it over to DNT.
Okay. No, I think Laura said that he does use Scott zones, so it kind of looks like a Scott zone, and this is way zoomed in. So this is what 6 minutes or so right here. So really, he's really quick on the trigger there. Entered right before that volume came in. And yeah, I don't really know either. I'm curious if this is one of Scott's setups.
I think
And
so.
if it is, I'd be interested to hear which one it is,
Yeah. Yeah. Okay. Well, I didn't give you guys a good one to make a lot of comments on, but we'll turn it over to Robert.
Okay. What I can see is some kind of level he marked up and aggressive accumulation, and I can notice, but generally I'm not able to comment on this so much.
Yeah. Trading is life. You can take a shot. It's pretty wide open still.
Okay, well, I agree with TNT and John. I think he was a little premature in jumping in and getting in the trade. He should have waited till the buyers started stepping in. I would have entered right at the big bubble right there, that's showing me that the buyers are aggressive.
This one?
Mm-hmm.
And yeah, that one. That would have been my entry. And my stop sign would have been in that right there, right where he entered. That's where that would have been my entry, and my stop sign would have been right there.
Mm-hmm.
Yep, right there.
Okay.
There's liquidity on top. So I think he was aiming for that, but other than that, I think he needs to just try to focus on less wedges. I mean, in trading, less is always more. He has way too many distraction on his chart, but if it works for him, I guess it works for him. But it's kind of confusion. But that's all. That's my comment.
Okay. Okay.
Nice.
I can
good
say
job.
something.
Yeah, I just have a few comments here. Kind of related to what John and all of you guys were kind of saying. There's some beautiful, actually some really nice structural elements of order flow in here, and it's kind of rare. I don't really, I see a lot more noise these days, and it used to be so clear to me some years ago. Like you guys had mentioned, all of this liquidity you know, on the offer, right, on the way up here. Okay, we know where the liquidity is, and we can put one and one together. We know the aggressive buyers are coming in, right? And we know that we broke this structure here, okay? And there's aggressive buyers. So we need these two things for this liquidity to be targets. Where we need the, first off, we need the high liquidity and on the offer. And then the next thing is we need to see that there's buying interest to reach those sellers on the offer. Okay, so this is a great context in here. And what I really like about it is a couple things. One is what I don't see is so clear in here is look at here. How much liquidity you guys see here, right? There's really not much of a market. So no one's really buying and they're not really on the bid, I should say. They are buying, but it's more about aggressors. So this is where, you know, exhaustion, you know, you can look at some of these things in here. It's beautiful because like there's another one in here, flip of the order book. Now it's not like a you know, a divisive or like what do you call it? You know, something that's illegal. But they're on the offer here. Now they're starting to show on the bid here, right at this 69.60, it's pretty faint, but they are bidding there, and it took them a little while, you know, so to see the interest here. You can also see some of that interest up in here. It's pretty faint, but they're, you know, they're there. Typically this is another thing that, you know, a little bit of kind of feedback I can give is usually on a reversal, I see a little bit maybe of liquidity here or maybe more here, and you really don't see too much after that. Up in here it's kind of rare unless it's maybe getting ready to reverse, but that kind of darkness over here is just, you know, that there's really no market. The market is being made up in these areas up in here. Yes. And this is what can really help you stay in those trends, you know, until you see something different. So some really nice stuff in here that I don't know if he was looking at it or not, because we don't have any call outs to it. Anyway, lots to learn from a lot of these charts. It's in there. Okay, so no other comments, guys?
No.
All right, let's move on.
No, not really. No other comments. Oh, there's this hard time frame. So it's like a breakout and pullback, low volume pullback, I think.
Yeah,
Long.
it looks like right here. So this is at the close, at the close too, right? Okay, and that's where you exited as well. Oh, you got a nice, well, it's a 10, like a 10-point trade. Here's his previous high here. Okay. All right. And then the second trade in here. All right, let's take a look. Let's take a look at the first at the higher time frame in here. Demand zone. Okay, yeah, that's not bad. Coming back to point of control kind of area in here, and then looking for maybe a bounce in here. Deep pullback, and see if it can come up and revisit some of the highs, and there's that deep pullback. He just takes it up to the swing here, right? Okay, trading is life. I'm going to turn it over to you.
Okay, so I would have waited to after it broke the structure. Then I would have entered the trade because it could have easily reached the top of that structure and then bounced back. So I would have. I think again his entry is a little bit premature. I would have entered at the top.
Here? Or
No,
where?
down. Go down some, right at the circle, right
Oh,
there.
here? Over here?
Next,
Or
no, the top of that triangle on top, Bruce.
on top?
Let me give you the amount. Give me 1 second. I'm trying to zoom in myself. So at 112. You
Uh,
wait. I would have got in. I'm sorry, at 111, right there after that pullback. The top of the top
here.
of
Here.
yes,
Okay,
yeah,
got you. Okay.
right there, right there. I would have got in right there, right there. You see the pullback into it. It got rejected, came right back up. That would have been my entry, and my stop would have been right beneath it.
Yeah. Yeah.
Right there, exactly. That would have been my play, and that's my stop loss.
Would this be your target? Or would you trail or
No, my target would have been on top, the top of
this one?
I would have trailed. My target would have been the top of the structure, right there. Yep,
Okay. Okay.
right there. Yeah.
Wow, trading is life. You're very concrete. You know exactly what you're looking for. Really, really great to hear.
Thank you.
Okay, let's turn it over to D&T.
Hey Laura,
He
this is
kind of
UTC.
trades how you trade, or at least looking at profile.
Yeah, I was looking at it. It's UTC1, right? So I just did. Laura just said here it's 9 a.m. London Open. I think I just did the conversion for this trade, and it's on silver. So this is like 4 a.m. If I did the calculation right, I think this one here is 4 a.m. Eastern. Silver. I don't know what the silver's hour. I don't know what silver's hours are, but interesting setup. It looks like if you go back to the higher time frame chart, it looks like it was going down like a downtrend. If you look in the middle,
Yeah.
it started after the impulse up. It started to like fail down, 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 right there. Yep, and then boom, it does this like trendline break accumulation to the upside, and then it keeps squeezing, and then you get this huge impulse up again where he drew that demand zone at, and then it pulls back to it. So it's interesting. It looks like there was probably a trendline break accumulation though to the left though, which created this flag kind of where he drew his demand zone at.
Yeah. I mean, there's a couple flags in here. Well, it depends on what time frame. I mean, this could be where you might be looking at a small downtrend here, whatever. But like, I'm seeing impulse move, pull back, top of the structure, and continuate. But and then same thing here, impulse move, deep pullback, and then continuation.
Yeah, I retraced that whole thing.
Yeah. Okay. Let's see.
It goes back to what I was saying. You see it went down into the structure. Look at the pullback. Look at that long wick. Right back out. That's why when they entered in there, he was too premature in entering. Yeah, right there. Look at that wick. Pullback. Yeah, right there. That's why. That's the rejection right there. That would have been my cue. Soon as they broke that structure to get in.
No, I think you were up here. You were looking for it up here.
Yeah, exactly. Right after it broke down.
Oh, got you. Okay. All right. You're not looking at this one in here. That's too aggressive for you.
No, way too aggressive.
Okay.
Right there. Yeah.
Yeah. Right here. Got you. Okay. Let's see. And let's see, Robert. Any comments on this?
Yes. Can you switch the pictures to
sure.
the previous one? On this picture, maybe I would try to draw the descending line. Actually, two of them, the main and the accelerated one. On this, maybe
so
try
like this here.
Yes, this and this one. It's okay, and the second accelerated from
here on up.
Yes.
Got you.
Yes. No. In the same direction, accelerated. So this first was main, and the second trend line will be faster to go more aggressive and earlier.
He's talking about trend line down,
Yes, trend line down.
straw, like a steeper
From
trend
this,
line down from the middle,
Oh, here,
930-ish. Yeah.
yes,
Okay,
yes. So
got you.
so one possible aggressive entry with the help of delta bars at the bottom. We can notice the delta bars at the bottom, so we can do the aggressive entry. Oh yes, exactly. This is the first entry, and the second, as everybody said before, maybe after the pullback, yeah. Or at this a big aggression. But if I would notice the bigger horizontal structure, I would enter after the pullback. So these are the 2 points I have noticed to be possible to enter.
Yeah.
And that's all.
Okay.
That's all.
Okay. All right. Yeah, good stuff. I mean, looking at this, like right now, it looks pretty good. I mean, it pulled back all the way to where this aggressive buying came in. It went a little bit below it. Now this is silver though, so it's going to kind of skate through that a little bit, and then come back up, and you see the aggressors are back in. If depending on how you wanted to trade it, maybe you take it back up to the top of or the structure here. There's no liquidity in here, or very little, so it's hard to kind of judge that. But structurally, these are some areas to consider. Anyway, John, we'll turn it over to you.
Sure. I'm not seeing it in here as far as trading where he's talking about. The only thing that I could see participating is where you have volume and liquidity working together, entering it at 8:30. So over
Gotcha.
a little bit where that volume came into the market, and you have liquidity present at 12, 12 and a half, and 13.
Right in here.
Right up from there. So so you're building off the POC, volume comes into the market, and then you have your levels up there. That's where I would be interested in trading. I can't justify trading where y'all have been talking about now. But there it's clear, quite clear.
Yeah.
Volume
I
really-
hear you. That's textbook John
Yeah.
4:12. I'll tell you that.
Yeah.
Yeah.
And I'm not familiar with silver. It's been years since I looked at it. It's a little too thin for me, and volatile.
And
but
volatile. Yeah.
But that's what I think. That's pretty. That's what I love about Bookmap. It allows you to establish those relationships between present liquidity and volume trading to it. That's lovely.
Yeah. No, nice catch there, John. And also, there is some. I mean, this is a half hour here, right? So, there's some stuff in here. So you can see there was some on the offer here, and then boom on the bid here. And what's the reaction? Buyers. So where are they going? They want to go to here.
Yep. Yes.
Yeah. Nice. That's textbook. Boy, we should just turn that into a video.
Boy, that really is
setup.
quite good. That's a great model, and it tells you when it's there and when it's not there, and that's why I was saying I don't see anything in here because I don't see like what we were just talking about on the left-hand side of the chart.
Yeah. A lot of traders have been over the years, we mostly cover like the S&P and E-mini and the NASDAQ E-mini. A vast majority of the content is in what traders are trading is that, but it's good to see like other markets in here, and then sometimes you get a clean setup. Like for John, this is that's pretty clean. And if this thing's moving, like you know where it's going, you have your targets, and the aggressors are here and they're breaking a structure here.
Yep.
So and you've got this kind of behind you as well after it just traded into it, and then they're flipping. These can be just super clean, easy wins when you see stuff like that. Others trading soybeans, or a lot of people are trading gold, but he's got gold and crude up here as well. But anyway, we should probably branch into some of these other markets and take a look instead of like, because again and again, you'll see these really clean opportunities, and take advantage of them.
And you can ride your stop right behind those big volume bubbles, right?
Yeah.
I mean, as soon as they give out, you want to get out. So you can ride right behind that. That's what's nice about those moves.
Yeah, exactly. Because it's going to come back.
Absolutely.
Yeah.
And so you ride pretty closely to that. You're joining in with that massive, and this is early in the morning. There's nothing else in the way. So yeah.
Yeah. Good. All right. Yeah, good stuff. So good discussion nonetheless. Awesome. I love it. That's what these Academy meetings are so great. Your guys' feedback and people's markups and what they're looking at, and then it's just too bad we can't open the mic for some of these guys. Anyway, let's move on.
Cool to see silver.
What's that?
Yeah, cool to see silver up here. Different ones. Pretty cool.
Yeah, absolutely. Let's see. Tim is not here either, but we covered him last time, so we might just maybe we can double back to that one. Sierra Charlie, new guy in the pilot program in here. So I believe he's in the pilot program. He's not. He's marking it up in Bookmap as well, and that takes a little bit of patience, and it's Bitcoin too. So, but yeah, it looks like he. Let's just take a quick look at it because
I don't see him in the pilot.
Yeah, I don't think he is. Someone though, I forget who it is marking up their charts in Bookmap, and then taking the screenshot. Anyway, I thought it was him. It's someone else. Okay. Boy, it's Bitcoin. I mean, it's so algorithmically traded. It's hard to read some of that liquidity. I mean, look at all these algos in here.
Oh my god! Yeah, can't see anything.
Yeah, and these are 15-minute blocks of time. I mean, you see some stuff like over here every now and then, or down here. And this isn't bad. There is something to take away from it, but yeah, I'll throw it over to you guys and D&T, since you're already got the mic on. Anything you take away from this?
I'd have to read it. Let's see. Structure breakout entry when confirmed. So it's taking a breakout. Structure break confirmed. So it looks like a breakout.
Right in here, I guess.
Trade.
Yeah. Breakdown.
Scale at the structure. Aggressive sellers okay. Price aggressive. Extended target likely. First bearish target, extended target. After he hits his extended target, he's just sitting back. And then go to the right. Buyers absorbed, break confirmed potential. So do you see any trades on here?
Well,
I see.
Not really, but like I mean, there's something I can kind of comment on that I think is there's something to it, but anyway, I'll turn it over to you guys, and I'll go last. So how about trading is life?
Real quick. I was gonna say real quick, when I hit a target too like that, it's usually a good idea to sit back as well. I usually do this. I do something similar as well. So when I hit a target, I usually just wait for confirmation for the market to show me the next move. If I wait for it to kind of like show its hand on the next move. Otherwise, yeah, it's trying to trade the chop, or trying to trade the because you're just kind of trying to predict what it's going to do at that point, instead of waiting for the market to like show its hand Here it seems like he kind of like was doing the same thing where he just kind of waited after he hit his target. He just like sat back. So
Yeah.
that's good discipline. That's all I gotta say.
Right. So any other comments, guys? Trading is life. I don't know if you have anything to say.
No, no comment.
Okay. How about Robert or Bitcoin?
To this one, not, but general suggestion to everyone, if possible, please execute trades directly in Bookmap or clearly mark the entry areas, because in this case we can discuss a little bit more precise.
Yeah.
In other case, we cannot give good feedback, because sometimes entry a little bit later or earlier is not a good, not the best entry. So in many of these charts, I cannot see the entry. Only some people put some arrows, and I would enter somewhere here. So
Yeah.
it's not good. So we've got the software, we can use it. So. Or, this is my opinion, general.
Yeah. Great comment. So for everybody, like, yeah, please try to, mark up your entries, exits, or just trade from Bookmap, and then we can see it, and we can give you so much more detailed feedback if there's a trade involved. But John, I'll turn it over to you.
Hey, this chart is telling me to sit on my hands. I see nothing. And he has another chart in here for Bitcoin, and it does show levels. I don't think you have it, Bruce, but I'm just looking at it in the Academy. It was from the 31st, and it is showing some levels, but because it doesn't have any levels up there, you really can't frame up what you can do with it. So I would just leave it at that. I look at this and say, I see nothing to do here. I can't make anything out of it. No, sir.
Yeah. I mean, I just got a couple of things like that, and I wouldn't have traded anything, but there's some things to maybe kind of look back at that confirm some ideas or things that we've talked about before, like in the All Markets webinar. And it's not a whole lot, but first off, Bitcoin. I mean, look at all of this stuff. I mean, look at these algos. They're following. Here's one that's closer, that's following. You can see it on the opposite side here and here. This is it's really hard. And look how close things are in here as well, and they're playing the same games that we just looked at when you zoom in. And but look where there's high liquidity, right? And look at it up here, right? Now we don't know. I think this is that algo, so that's probably BS. It's probably just this. It'll probably turn into something like this right here. But this stayed in the book in two levels here and here. Okay. And after a big sell-off into that, look at the buyers come right back in.
Yeah.
So I mean, I noticed this kind of behavior in the NQ a lot. And it being thinner than the ES, once it trades into that high liquidity, you after a big move down, like, you're gonna likely get a response. Now, I don't know if this was a key level or not, but and it's super easy in hindsight. Okay, and it is a key level. This is 74,000 here. So anyway, like like, we're just not making this stuff up. It's here, right? It's telling you something. And the market sold off into it, and we got buying. And look at the angle of that, and look at the volume on that. Look at the volume spike on the bar here, and then also the dots. And we get a pullback, and we get another move back up to now target wise, I don't know, market structure, you know, maybe, but that's you know, all I see there. And then another thing too, and this is something that I've been mentioning in the All Markets webinar when someone, I think it was, well, everybody has been asking about what do you mean by key levels? And I've been talking about the swings, and then recently I think it's gotten a lot better where we talk about major and minor, or you know, high time frame and low time frame swings, and this is just riddled with it in here. So you know, depending on the time frame you're trading, like this down here is going to be a key level on this time frame, right? This swing down here after the move up. Okay. Also, this little swing up here is going to be kind of a key level. Now, I know that's hindsight, but look, this is a minor level in here. You still get a reaction, right? This is a little more important. Got a nice reaction. So, and then up here, can't seem to break it, can't seem to break it. And then comes back down here, we get a bounce. Okay. So, I mean, what I'm trying to say is you don't, not to trade every minor level. In fact, the opposite. Just look for your more key levels, you know, kind of like a little bit higher time frame level. And those are you're gonna get a better reaction at those areas. Now, not always. If it was, we'd all be millionaires. But that will keep you out of all of this.
Yeah.
And that's what you want to avoid. Now, if you're trading really hyper scalping, fine, go for it. You know, you know, trade this little key level down here, but you better be taking your profit up here. Yeah. You know, or easing out of it or something, because it's the same idea. It's just on a much lower time frame. Now just also note that these little levels in here are much easier to break. You know, you can see it easily come back down here and test this one.
Yeah.
So you see it all the time in the S&P, in any of these markets, typically. So these major and minor levels. So stay away from the minor levels. And then look for your bigger swings. Okay? Even if it's just on a smaller time frame in here, these are more important levels. So anyway, guys, that's all I got from this chart here. Okay, let's see.
Beautiful.
And we got more to, yeah, we'll go over that. I'm putting, oh guys, I'm just getting annihilated over here at Bookmap. With all sorts of other projects going on. I promise to get these guides to you. This minor and major levels or swings is going to be part of that guide. I'm going to put that together with time of day. I'm going to put that together with your daily outlook. I'm going to put that together with your trade review at the end of the day. It's going to be great. I can't wait. So hang in there with me. I know I've been absent in the pilot program with feedback lately, but we got some really good things coming out. And we've got another setup as well, the low volume pullback. That will also, it just dovetails beautifully with this trendline break accumulation. Right? So you have
I can't imagine how busy you are.
I mean, it's going to be great. You guys will be able to look at these things like you're already doing it. Like, you know, DNT, Trading's Life. I mean, John's been doing it for a long time. And Robert, you guys are putting this context together and then seeing these things. And then it's like, oh, you know, oh, now I get it. Like, you know, and it's not like you figured it out, but you understand this context and the probability is more likely. That's all. That's all we can do, you know, and it can be so helpful and keep you out of so many other stupid trades. And that's kind of the key. So Anyway, that's my spiel on that.
Oh, that's exciting to hear.
Yeah, I can't wait. I'm excited, really excited about it. So I just need some focus time. Anyway, let's see here. Guys, I don't know. I mean, like, no one's, everyone who we covered today, no one's in here. If there's, how about this? I'll throw it to you guys, so coaches. Is there anything in particular you'd like to go over? Something, it could be one of your trades. Else we can call it a day. Kind of save some of our kind of bullets for next week. But unless there's something very particular that you want to cover. Maybe a trade you took that you thought was really interesting or you learned a lot from.
Yeah, maybe I will mention about one trade that I was looking for the trend line break accumulation. Exactly, it was today, and you can find it somewhere in the pilot program or.
Okay.
Can you?
This one
oh,
here,
yes,
Robert?
yes, it is here. Yes, to general and maybe I want to tell one thing that I have noticed, that I was looking for the big trend, because today the price was going down, and I have noticed that price started to move sideways, and I have noticed also the big horizontal structure. We have also the very good high level the level of was from the 21st of January, so it was very important place, and also the price was very close to 868.00. So this is so it was the accumulation of the points. And what I have noticed, that I'm looking for the big trade, big move up, but before, at the bottom of the structure, I have noticed also a very small in the microstructure, also the trend line accumulation. All of the examples. Yes, so I decided to also take the very small part. Maybe it was not perfect, but all of the parts were inside, and I found out that, as a matter of fact, I was looking for the big, completely different trade, and I decided to take this one because there was few reasons. It was very low. The price did not went that day till this moment. We have very strong support. We had till now 4 bounces from this level. So I said, even if it's not perfect trend line break accumulation, but as a matter of it was quite good. It can be good entry for just go to the top of this horizontal structure. So this is the only point I wanted to make, that we can notice something else, and it was, as a matter of fact, quite nice day, because I had some more trades on the way up, as you can see, but maybe I don't know if you should discuss them or not. All of the trades were had supporting entry with volume delta. The upper trends were at the break of the structure. As a matter of fact, I made one mistake there, and by accident I closed first and the second trade, because after the first trade at the bottom, I took the second trade at the break of horizontal structure, and I wanted to do something. I don't know. I clicked and
The little
closed.
selling here. Yeah.
Yes, I closed all of the trades first, and the one that I have opened. So I decided to and it was a little bit small pullback. So with the better price, I entered again with the free contracts, and you can see I take profits. Oh yeah, exactly, two contracts here and a little bit with the stop loss. No, not here. Oh yes, exactly. So if I had no trade, I decided to take it again, and took two contracts, and it went up. So it, as a matter of fact, we can notice also this trade from today on the second picture, because we can see exactly. Can you show the second one? Oh, yes, maybe without marks, but we can see all of the first trend line accumulation with the aggressive entry, very aggressive entry, and all of the others. So generally, the reason I wanted to say that we can notice something even at the bottom of the structure, what suits or what also suits. So if I also started to look at the bigger picture, at other things, using volume profile and market profile, and it's very clear for me, and starts to be very clear what we will have the next day. So 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 that's why it's easier for me. It's easier to 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 do the next move, not to be afraid to jump in and again, because I see, normally, as you often said, hit the single. I like it, but when I see the very big structure, and on the previous you have seen that we had the bigger structure, so I have a lot of space to go up. As a matter of fact, maybe tomorrow, maybe not. I'm not sure, but soon we will have also the way up. So we are the third or fourth day going down, and today we made quite a big move down, and the value area has jumped a little bit lower than I expected, because the previous 2 days the value area was a little bit going down, and we today skipped like 1 day. The price was similar to the previous days, but the volume has jumped to the bottom. So we don't know exactly if we'll fill the gap of the missing volume somewhere a little bit higher over today's volume area or not. But you cannot see this on this picture. So just I wanted to say that having Bookmap with the very precise possibility to enter, it's something very good, but it's good to know where to go. What you always mention on the beginning, where is going the market or something like this. Yeah, you have to know.
Yeah.
So,
I mean, I think all of these things, like for you as well, Robert, like you put so much effort in very early on in this program,
yeah.
and now you're kind of, I see you kind of moving on into, well, you're getting super aggressive in here, more aggressive than I would be, for sure. But you have your reasons, and you like taking your singles, etc. The But what I'm getting back to is, again, we've been talking about context, and it's starting to kind of come together for you as well. You're seeing like the bigger picture, putting that into the smaller picture in the order flow and the elements in the order flow, and your key levels as well. And then like, okay, now I'm looking for my order flow events in here to give me the where I want to get in and where I want to exit, and manage it. Nicely done.
Yeah,
So
that's all.
Okay, well, let's see, John, any questions or comments on any of this?
Yeah, I read it the same way in here, Robert. In fact, in this 30 handle range from 68 even to 30, it's all buying in there. It's all accumulation. I bought very small and held, and I was looking for the big pop. Every time we went down to 68, um, the 68 area, I saw a bunch of sell sweeps come in. And I thought with so much accumulation in there, it would take for so much for this thing to fall out to the downside. So I was buying in here, like I said, very small, micro, and looking for that push out of this range, because you can see by the delta bars, they're all green down there
Yeah.
as it's making this range. And so I saw it the same way. I didn't play the smaller moves. I actually played very small, looking for that push out of that range. So I concur with what you were saying, and really I don't see that as being very aggressive down there at 68, because you had so much buying in that range. I mean, every time it got down to 68, they came in and started buying like crazy. So I think you had a great idea there to buy in there, because you would know, but it would take so much to push that down out of all that buying range in there. I mean, there was 30 handles and they were just buying everything in sight in there. So yeah.
Okay.
Nice, nicely done. DNT. DNT still here? Guys, I can't see because I'm in Discord here.
Yes.
Okay.
Yes.
Okay. DNT, any comments? If not, we'll trading is life. Jump in.
Yeah, I agree with John and
Check.
what he was saying. I have no extra comment.
All right. DNT.
Oh, yeah. So, just there's been a few people in the pilot program that have kind of like stopped commenting or stopped posting, and I can understand why. And another thing that I've also noticed is people wanting to trade the real market right away, and we've talked about this a few times. Like, um, when you're like feel this rush or feel this urge or need to like trade the real market, just just keep in mind that you're pushing towards something. You're pushing towards something different. Like, it's not just to make money. It's not just to um get this like dopamine rush or anything like that, but it's to actually like learn the concepts of like support. So we're trying to learn the concepts of support and resistance, and in the pilot program, and as you keep going through it and keep going through it and going through these replay iterations, you start to understand like what creates support, like all that passive accumulation on that way down, for instance. That's creates support, right? And then you see all this buying, all this aggressive buying coming in as well, then that creates another form of support as well. And so although it's not easy to trade because right now the swings and the rotations are very wide, it's very difficult to kind of to trade this market, I think. So it's a really good time to learn, and you're not just learning the setup, but you're learning these concepts, and as you keep doing them, each repetition, you're ingraining these concepts in your brain, and you just got to keep going on and on and on to like to learn it more and more, and you start to build this conscious incompetence. I start to go from conscious incompetence to conscious competence, and you're building these mental chunks in your head. And just wanted to encourage people not to get too distracted with the market. These swings are huge, and there's a lot that money and stuff that can be made. That's not what it's about. It's about process. It's about continual growth and getting better each day, and trying to win the day. And so these trades from Robert are nice, and I appreciate them, and I appreciate that
You can actually
the
lie.
key. that the P&L is not on here as well, because like that's not process. The P&L is secondary. Process is primary. The process is what matters, and we're gonna have losses and we're gonna have wins. So it just comes with trading, and we're trying to get better, and just over a large sample size is when we really start to see our edge, not just over one trade or two trades or anything like that, or P&L. It just comes with time, and just keep pushing. I just wanted to encourage other people that if they're getting distracted by the market, because it's easy to do, I do it too all the time, but try to remember that you're building a process, and we're all building a foundation to be professional traders here, and that's what the goal is. That's what we're really striving for. That's what we're really aiming for here.
Yeah,
Yeah.
good stuff.
Yeah. Can I piggyback off that, Bruce?
Yeah.
Because like DNT said, I'm starting to see less posts, even with the academy. Today, I didn't see that much participant. I know you want to get in the market, you want to make money, but honestly, you're doing yourself a disservice. You're gonna lose money unless you learn the steps. Like when Robert first joined, and where he's at now is like unbelievable. I know he had trading experience in the past, but as far as learning those concepts and the way he puts everything together, just how he just articulated himself today was just awesome. But yeah, like DNT said, if you want to get in the market, I know you want to make money, but you're doing yourself a disservice. Go through, put your reps in, get your memories, your muscle memory, so when you see the steps and understand how they work, not just see the steps and say, okay, this is the 4 elements, 1, 2, 3, 4. But you got to understand how they connect with each other and how the overall picture works. Then you do the forward testing and stuff like that. I mean, Bruce is not telling us nothing that's going to hurt us. I'm talking from experience. So please continue posting, continue attending these classes, and you will see the benefit in the long run. Back to you, Bruce.
Yeah, I just can't agree more. And I mean, just the only thing that I would add in there is like, as you guys know, like you're playing your game. You're waiting for the market to come to you, and when it presents itself, you see it. You know how to react. You're battle tested. You've seen it like hundreds of times now. You've traded it hundreds of times in replay mode. You've forward traded it, and that's when that dopamine rush, or you want to trade the action or whatever it is, it will subside, and you'll start making money much more consistently. And you know, that's the goal, is to build that edge for yourself, and you're trading the way that you know works. So anyway, I you know, we can go on and on about that kind of stuff, and you know, and we will, but yeah, please guys, like, keep posting, and keep interacting. The back and forth in here, you know, what is it, like the 12th player in the you know, Seattle Seahawks, you know, Superdome, you know, it's the community. Like, you know, it's super important. Like, you're going to learn so much from the back and forth in the community. I mean, just, you're going to learn so much by looking at Robert's post. Ask him questions, point blank. He's in there. So yeah, you'll get a lot from it. I just have a couple of questions, Robert, for you in here, and then guys, I think we'll wrap it up. But what about here? Like, you know, why aren't you entering in here or in here?
I can tell you, I did. I recently I had so many trades, and I'm so happy recently because, you know, everything is going so well. But I I had to switch off the Bookmap and load again, so you cannot see these trades
Okay.
because, as a matter of fact, I took all of this big trend line structure down. It was also my profit
Yeah.
because I put the trend line to my English is so not so good to explain, but anyway, I did the trades before, but you cannot see them in this picture.
Okay. And then another question to both you and John. And you know, I know it's a big down day. However, like, you know, we have massive accumulation, right?
Yeah.
And now it never traded down here, and we've seen this, you know, many times. You actually have your 21st January. That's significant.
Yeah, it was
That's
the first. It was the first target for today for me
yes.
because I have noticed this level and I was heading in this direction. But later I started to maybe it will go a little bit lower, and as we know, the market ended much lower.
Yeah, yeah.
I-
So I'm just kind of curious though, like, okay, so now if this is your, you know, key level, and also 6800
yeah,
is your key level,
yeah,
and
mhm,
you see all this, like, you know, passive accumulation and then aggressive
yeah,
accumulation. So
Yes.
yeah.
did you guys target up here?
Yes, generally yes.
Okay.
But
Yeah.
I've got also the other target because we are going down for the at least 3 days. So I've got big descending trend line, and the first target will be to touch and maybe bounce again to go lower. But
Mm,
I expect because we are low, quite low on this market now. We're looking at the last maybe I don't know even to the 21st of January. So we had some all day highs, and we are going down a little bit down. So answering your question, I'm expecting to that the market can possibly go lower, but looking at the bigger picture. But as I said before, we can have kind of pullback tomorrow through today's volume area because we have missed a little bit. We've got a gap in the volume, so I expect a little to go a little bit. Maybe I will measure to the. Maybe we can jump to the level like 68, 70, maybe,
mm, okay.
and from this level, I would be very careful because we can go again down, and I don't know how much, or the trend will change to go upside. So yes. So
Okay.
this is how I look at the direction. But I know that you are not very you don't like this other things that I'm looking recently, but for me recently it's like funny because when I look at the volume profiles and I can see that the price is moving back and forth to the and it depends where I am. I can easy decide having the book map when I wait a little bit and I see, oh, I'm on this level, and I look, oh, okay, we are a little bit below, let's say, volume. Probably we will retrace, and it's easy. I look at the book map. Okay, we've got the passive accumulation. We've got the aggressors. We can join, and really, I start to read it with the pleasure. But I was also very surprised with comment of DNT, because he said that recently are more difficult days because the swings are so big. And I said, I was thinking these are my favorite swings. No, so maybe I like the bigger picture a little bit, and the guys are perfect having, let's say, 3 or 5 ticks stop losses.
Okay.
So it's completely different approach.
Okay.
But that's all, and I want to John to comment because I talk too much.
So John, like like were you looking at I mean, you know, this high liquidity way up here, or were you
Yeah. Now I was
targeting?
looking for I was looking for a significant bounce off of this level. Now I don't track the 21st of January low. It's just not something I do.
Right.
However, this level in here was a significant gamma level for both the SPY and the QQQ.
Got you.
It was right at 595 on the Qs. It was right at 675 on the SPY. It was a huge level in there. So that sets my radar up when we enter into these levels. And then I see the option flow. I'm saying I see the order flow in here support that thesis for that gamma level holding. And so yeah, I was looking for a bigger move off of this. So I played it that way. Like I said, very small presence. There were 3 or 4 times I get in with micros, and I was looking for that larger move up and out, and it did happen. Yes.
Okay. Okay.
Yeah.
No, it's great. I mean, like from this image though alone, like I mean everything what we talked about in terms of the reversal, but then look at the continuation pattern here. I mean, this is it's beautiful. I mean, this is like a
Yep.
quadruple low, but like here's the move out.
Yep.
Here's the low volume pullback. It's confirmed here. Here's the move up.
Another push. Yep.
So you're looking for that. And these are great, typically great if you have all of this behind you, all of this passive accumulation and aggressive accumulation. You look for bigger moves, not only to here, but even above and beyond. Anyway, it's a really nice pattern.
So when you add the confluence of the same kind of picture, same kind of aggressive accumulation on the SPY and the cubes, that also supports holding on for a little bigger move, because that's what we saw. Huge support, huge buying on the EFTs.
Yeah.
Or ETF markets.
ETFs. Well, I'm kind of curious, John. Then if you have all of that alignment, is it just because of the volatility that you went smaller size?
Absolutely.
Okay.
Yeah.
Okay.
Yeah. Yeah.
Because like if you have all those things and it's confirming it, like maybe size
I
up.
can't stand the heat. No, I just don't want to take on that risk.
Yeah.
In fact, I have moved over to doing some of the work in the Russell, because I want to avoid the volatility. I'm not willing to take the risk in here, simply because of you never know the next news item, the next shoe that's going to drop out of Washington.
Right.
And I'm not in a position to, I don't want to be in that position. I'm going to go real light. But I can do it in here because I know as soon as that 68 is broken down to 67.90, something like that, I know I need to get out. But I trade really small with this massive volatility. I mean, that's a 30 handle range in there that they're going back and forth.
Yeah,
I
totally.
can't take that with a mini. No.
Okay. Another thing, just is a small detail. Well, depends how small of a detail. I mean, the order flow is also supporting it, not necessarily trading to 6,800 here. The reason being is they're bidding up. After all that accumulation, you see this, it fills, and it starts to trade in it. But see how they're bidding up in here and in here, right? And it's getting redder underneath here as well. So they're interested buyers, and kind of avoids it. That's why they're kind of chasing, trying to get in here at by providing liquidity at a higher level. That's a bullish thing to take a look at. Anyway,
The other thing you can look at, and one of the things I love about watching the option flow, is I didn't see the option strikes rolling out to the downside. That usually precedes a move to the downside. Hero was holding, Hero was stable, and so that told me that, at least in the Qs and the SPYs, that they weren't rolling out; that they were holding. And unless and until that happens, you can make an argument for support there.
yeah, nice, nice, really nice confluence of all sorts
Yeah.
of higher time frame events.
Yes.
Yeah, beautiful. Yeah, thanks, Robert. Thanks for showing.
Yeah. Nice
Okay.
job, Robert.
All right, guys. I think let's wrap it up. I think call it a day here, and we'll meet again next week. But welcome back, Robert and John. Great to have you guys in here.
Well, thank you. Yeah, sure.
All right.
Yes, thank you.
All right, guys. So let's see, Robert, give you the last word, and we'll wrap it up, and we'll meet next week.
Maybe last word is that I'm very happy that I'm in the community. People probably cannot understand, if they are not joining, what the community gives. I just recently finished the Bogdan's book, where there are stories of 10 traders, and everybody is different, but everybody has his own way of trading, and it's combination of other traders' experience. And there were also a story of one trader that started to understand a little bit and jumped to the other firm, and he lost 4 years. 4 years because he had nobody from whom he could learn. So having such a experienced guys close to me, it's for me it's very valuable. Like when I hear the John is talking about the gamma, or commanding my or other people trades, when he sees completely different things that I cannot see, it's a lot of value for me. So I'm very happy that I live in live environment, such active people around. So I'm very happy to be here with you.
Good.
That's all.
Excellent.
Thanks, Robert.
Thank you,
Yeah.
Robert. Thank you, everybody.
Yeah.
We'll wrap it up. Have a great evening. We'll see you next time.
See you.